Hello traders and welcome to another video review. Today is Wednesday, June 28, 2023. Let's find out what's going on the Forex economic calendar today. CPI data from Australia had been published overnight, and as you can see, the actual reading was 5.6%, which is way lower than the forecast of 6.1% and way lower than the previous reading of 6.8%. So the CPI is decreasing in Australia. JFK German consumer climate data are scheduled for release at 8 o'clock, and 2 hours later we got the ECB President to give us a speech. Plenty of speeches will be released today from various officials like Bank of England MPC member Pill, ECB Lane, ECB Arena and Bank of England Governor Bailey throughout the day. In the meantime, we got the data from the US in form of the goods trade balance and retail inventories excluding autos. Both of them are scheduled for release at 2:30. The key event of today is the Fed chairperson Jerome Powell to give a speech at 3:30, and then ECB President Christine Lagarde will give a speech as well 3:30. Crude oil inventories are scheduled for release at 4:30. So this is a very important data release for all of you crude oil traders, together with the Cushing crude oil inventories. Again, we have a speech from the ECB President Christine Lagarde at 5 o'clock, and then at the end of the day, after the New York session, we have the Fed Bank stress test results for the quarter of 2023 second quarter. This is bank stress test results are scheduled for release 10:30 in the evening. So this is the situation on the Wednesday from the Forex calendar point of view. Plenty of the very important and very important data are scheduled for release. So let's now find out what's going on charts, and we are supposed to start with some of the very important changes made on the Australian dollar chart. As you can see on the Australian dollar chart, we have a dip lower. We have a dip below the technical support. The technical support was located apparently at the level of 6,666 pips, and this level had been violated. So now we are heading lower. We are heading lower towards the next technical support, which is located around the level of 6,552. So this is the important technical support, key technical support before the swing low is hit at 6,461. Momentum is weak, momentum is negative. There was no chance for the momentum to break above the level of 50, despite the very nice bounce from the extremely oversold market conditions on the 4-hour chart. Now we sharply reverse to the south, and as you can see, we were rejected from the moving averages, 150 periods moving averages as well. Breakout make a new low. The new low was made at 6,621 pips, and we definitely are under the very strong bearish pressure. The target is on the screen. As you can see, we are heading lower and lower. So right now the Australian dollar is being sold across the board. What's going on the New Zealand dollar? The situation is very similar on the 4-hour chart of the New Zealand dollar. As you can see, we have a very, very strong movement to the downside. The local low so far was made at 6,091 pips, and we are heading lower towards the next technical support or Fibonacci retracement level. Let me just find out what's the Fibonacci retracement for this movement is actually, so we can have a better understanding of what is going on. So as you can see, we have this swing high. Right now we broke above 50 and we are heading towards 61% of the Fibonacci retracement. This level is located at 6,080 pips. There you go. This is the level of the 61%. If we break below this level, then of course the chances for the rebound will be drastically lower. We got this trend line here. As you can see, plenty of time this trend line has been tested, and it always was rejected by the bears. Very strong pressure, negative momentum heading towards the extremely oversold market conditions. So the 61% of the Fibonacci retracement is the next target. There is still room for this movement to the downside to hit this level, and there is still the room on the other side to hit the extremely oversold market conditions. So negative outlook for the New Zealand to the American dollar. The New Zealand is being sold across the board. Let's find out what is going on with the crude oil, because we have the crude oil inventories scheduled for release later on. The crude oil right now is trading inside of the range. Let me just find out the current key technical support levels for you. One of them is 67.04, and there is one more level lower, located at 66.80. Those are the key short-term technical support levels, and of course the technical resistance is still located somewhere around $75.3. So this situation on the crude oil is still very specific, because we are trading inside of the very narrow range. This range is located exactly between $67 and $75. So the market participants await the trigger that could spark some sort of the movement in either direction. So far, the higher time frame trend is, as you can see, is a downtrend. Okay, so the outlook from the higher time frame remains bearish, and market participants await a trigger to continue the downside movement. So this horizontal trending range has been continued since the beginning of the May. So it was almost 2 months already. So maybe today's data release in form of the crude oil inventories, if they will surprise market participants, might trigger increased volatility breakout below the key technical support. Remember, 67.4 and 66.80. This is the technical resistance support. The resistance, of course, the intraday resistance is located somewhere around the level of 70.06. But as you can see, the market keeps trading below 50 and below 100 periods moving averages. So we can see that there is some sort of the bearish pressure as we approach the technical support. Momentum remains negative, momentum remains weak, as any attempt to rally above the level of 50 towards the positive part of the RSI indicator, positive zone of the RSI indicator, didn't actually work, and it failed at the level of 49 points. So crude oil under the pressure. It looks like the market participants await the fundamental trigger to spark the movement to the downside. So please pay attention to the technical support, and it might be violated very, very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.